Yo, my people, I welcome all of you once again to my channel. If this is your first time watching my video, consider subscribing because on this channel, I always deliver my best. Yes, in this video, I'm going to talk about very important aspect of forex trading, which has to do with demand and supply. In other words, premium and discounts levels. Yes, in forex markets, what causes price to reverse up or down is the result of unfilled orders or imbalances in the market being caused by institutions. So anytime you see price moving up and down, it means price is going to fill unfilled orders or imbalances in the market, because all the time there are gaps or imbalances in the market being created by institutions. Now, when we say supply zones, what do we mean? Supply zones are always created when there is more supply orders at a given price. In other words, supply is also mean unfilled sell orders. Yeah, so take you through the supply or premium levels as well. Yeah, the second aspect of forex trading we are coming to talk about is supply zones. Supply also means premium levels, retail price, resistance price or resistance levels, expensive price, overbought. Yeah, these things mean the same thing. They are all referring to the levels where exchange rates are very expensive or high. Yeah, so on this note, I'll take you to the charts and then help you to locate supply or premium levels. Yeah, so currently the top here is our supply level, or we can also call it resistance level, premium level, overbought, retail price. Yeah, they all mean the same thing. So looking at this premium level, realize price rejected 3 times, and each time price rejected at this level, you realize it made the opposite direction. That means as soon as price tap liquidity at this zone, immediately it rejected. So this tells you that in forex markets, as soon as price taps liquidity, what it does next is to change its direction, because price always goes to where liquidities are located. Yeah, so as it got liquidity, then it will change its direction. Yes. So currently this is our 15-minute time frame, which means we are working on a daily cycle market. Yes, so let's look at more case study. One thing you must take into consideration is both premium and discount levels are not always of the same highs or lows. There are circumstances where there are this differential between the two highs or the two lows. All the same, they are considered the premium or demand levels. As you see, this is a typical equal highs premium level here. Yes. So scaling it on daily time frame, which is our daily resistance level, you could realize we have equal premium or supply level here of the same high. Down below, we again have our resistance level. Down again, we have another equal resistance level here, but this time they are located at the minor resistance levels. Yes, let's look for more case study. Yeah, this is another typical resistance level. That price rejected at multiple times. Yeah, another wonderful one out there. Yeah, looking at it, price rejected twice, and then they started a second rejection. Price made a momentum swing low. Yeah, so it happens on every time frame. This is the weekly market, and by all means you have resistance level. Yeah, this is our resistance level with one rejection, and after price tap or cleared liquidity at the resistance level here, it made a momentum swing low. Same thing applies on the monthly time frame, which is our monthly resistance level. So looking at it very well, this zone is our resistance level or supply level, premium level, whichever way you call it. Then after price cleared the liquidity at the high here, then it made momentum swing low. Yes, that's how it is, my people. Forex is very, very interesting. Yeah, this is our equilibrium line or flip line or mitigation breaker. I already talked about it in my previous video. If you haven't watched it, go watch it. Yeah, so flip line simply means where resistance tends to supply and supply tends to resistance. Looking at this zone, this level served as support for price to go bullish, and then price violated the line here because of break in market structure formation here, which we call mitigation breaker. Then in future, price rejected at this line, went bearish. Then in future got rejected exactly at this line. So this line now acted as a resistance for price to go bearish. Yeah, so my people, this is how we locate our demand and supply zones in the markets. At these very zones, institutions place their sells and buys to maximize big profits. Yes. So on this note, I would like to sign out here. See you in my next video. I love you all. Bye bye.